Thank you for joining us tonight for our second quarter Malaysian market outlook, where the theme for tonight is the trend is your friend. Definitely we are your friends, right? So a brief introduction of myself. I'm Adrian Ng. I'll be a moderator for tonight and for many nights to come. That aside, we have very strong profile speakers tonight. And before I introduce them, I'd also like to take the opportunity to do a bit of a refresher of the products that we have before we actually jump into the session tonight, which we will be starting at 8:30 sharp. All right, let me quickly share my screen. So what the screen that you're looking here is Kentrade.com.my, our main trading portal that you use to transact your shares. For those that doesn't have an account, you can actually click on an open account here. For those that already have, you can actually log in to look at your favorite stocks. And while we're at it, we are also running a promotion for discretionary financing. You can actually get the link inside Kentrade. Yeah. This allows you some flexibility where you can contract up to T8, and we are also running a SGX market cashback promo up to 1,006. That aside, this is one of a crown jewel, which is also where you can make some good money if you are savvy enough. Hold on, I'm trying to move to that. Yep. Which is Naga Warrants. And tonight we are very lucky to have Isabel with us also, where she can guide you through it more in depth. That aside, for the equities part, we also have two Telegram channels. One is Kenanga Trade to Win, and one is Naga Warrants. The links for all this is actually in the chat box, which I have pinned. You feel free to actually click on it and explore it. Yeah, so coming to our speakers tonight, I shall stop sharing my screen. Hold on. It's a bit laggy on my end here. So tonight, we have our head of research, Joshua Ng. He holds a double degree and he has more than 25 years experience in equity research. In fact, he's one of the seniors I look up to when I joined the industry as an assistant but he's with the other house before he joined Kenanga RHB, and he played a major role in the pre-deal investor education in Malaysia, Singapore, and Hong Kong. The other speaker would be our gorgeous colleague, Isabel. I think she's not foreign to anyone. She is a pro trader that deals in warrants. When she started her career in Affin Hwang and before she joined the Kenanga desk. Now she's the head of retail equity derivative sales with us. So without further ado, I shall pass the floor to Joshua so that we can start the session tonight. Joshua, the floor is yours. I shall mute my mic.
Sure. Hi, good evening, everyone. Thanks for your time. Thanks for dialing in. Remember the last time we were here was in January this year, and stock market has since run pretty significantly. If you look at the title of my presentation, basically our tone is continue to be quite bullish. I was talking to someone just a few days ago. This person was saying, maybe we should consider sell in May and go away. But I was actually telling him you should actually buy in May and laughing to the bank all the way. So basically, you can actually sense how bullish we are with regards to the markets. Okay, first thing first, just a quick recap with regards to our market performance in the first quarter of this year. Quite rare, I would say. I've been following the market for a very long time. I haven't seen market going up 6-7% during first quarter itself. And what is even more surprising is if you look at the performance by sector, every single sector under FBN KLCI is actually in positive territory. In fact, the last one who turned positive was actually technology. Even then, it has since turned positive. But of course, the bad news is the foreign inflow actually peaked around third week of February. At that point, the market was actually up by 2.3 billion ringgit if you follow the number. But right now, up until last week, we were actually negative 3.2 billion. So which means that over the last 6-7 weeks, you actually have foreign outflow to the tune of 5 billion, if you like. Even last week itself is 1.6 billion. Good news is, despite the very intense foreign selling, you can actually sense that our market is actually holding up very well. In fact, our market was actually at year's high yesterday at 1570 and above. So what we basically gather is that the foreign selling is very well absorbed by local buying. I think local investors, especially institutional investors, were kind of like under-invested in the stock market last year, mainly because of the political situation. Good news is, as you know, when the King actually spoke in the parliament, he basically said very clearly he's not going to entertain any move by any party to destabilize the political situation in Malaysia. So that is actually giving a lot of comforts to equity investors because we just don't like uncertainty. And it looks like the market wisdom is such that Anwar PM is quite likely to maintain his position until the next election in 2027, 2028. At least I would imagine that would be the underlying assumption of the market right now. So that explains why local investors are more than willing to put money back to the market. And secondly, I think we have a very weak ringgit. And I think the authority is trying to moral sway exporters to bring back ringgits, moral sway local institutional investors to actually allocate more money to be invested in the local market. I think this liquidity is actually providing the support to the market. So that's why you actually seen fairly strong markets over the last 1 week or so, even though US was actually undergoing fairly dramatic correction, but our market is still holding up very well. So next thing is, I think as and when the Fed starts to cut rates, when money starts to flow back to emerging market, I think that's when foreign investors will actually return to our market, and that should actually take our market higher from the current level. Okay, just to give you a quick recap as to the direction of the money, say over the last 1 or 2 years or up until the latest weekly numbers. If you look at the chart on your left-hand side, that is emerging market as a whole. I think we spoke about this previously. Basically, money started to come back midway through the rate hike cycle in the US, but some money actually flew out when the war started in Israel. But as and when FOMC actually turned dovish in December last year, you saw the return of money to emerging market. But of course, of late, there has been a fair bit of outflow, but it's not to be worried because the magnitude is actually not very significant. But Malaysia, the situation is a little bit different. We did not actually attract inflow up until 1 month before the state election last year, if you still remember. Then there was a bit of outflow when war started in Israel. Then FOMC turned dovish and money started to come back. But unfortunately, after the market peaked in third week of February, you have been seeing outflow to the tune of like 1.5 billion ringgit in 1 week. That is a very big number. But as I mentioned, good news is market is holding up very well because local boys are more than happy to actually come into bargain hunt. And as I mentioned, as and when the Fed starts to cut rates, foreign investors will come back to this region and they are going to buy up Malaysian stock again. That will actually push the market a lot higher. Okay. Our view on the market is still very bullish. For that reason, this time around, we want to focus a lot more on potential risks that could actually take the bring the markets down. Number one is, what if the interest rates in the US are to stay higher for longer, which I'll talk a bit more later on. What if there is a return of political uncertainty locally? What if Chinese economy is deteriorating further? As you know, China basically is our biggest trading partner. As the saying goes, if Chinese sneezes, we will actually get pneumonia. And lastly, what if the situation in the Middle East actually escalates? Right now, I think the main concern is you have actually freight inflation, mainly because all the container ship would have to go around the Cape of Good Hope instead of using Suez Canal. So that is actually resulting in higher freight costs, and it will actually reverberate throughout the supply chain. Okay, US. Basically, if you look at the table at the bottom, this one basically changes by minutes or seconds, if you like. I think right now the view is such that in the second half of this year, there will be 1 or 2 cuts in interest rates in the US. Some market observers or experts are even predicting no cut this year. We are not worried because even if you don't get any interest cuts this year, there would actually be roll forward to next year, meaning that if you don't get rate cuts in second half of this year, you will get them in first half next year. And investors, given that they are still very bullish, they are more than happy to roll forward their expectation to next year. But of course, coming back to how important is rate cuts to our stock market as well as emerging market, is that this is actually the major driver for our region, mainly because if advanced economies start to cut rates, it will actually make risk-free return in DM, developed market, a lot lower. Then money will have to come back to this region. Okay, what basically triggered the expectation on rate cuts? I think there are 3 key economic numbers that came out over the last 2-3 weeks. Retail sales, after missing expectation in January and February, March, it actually surpassed expectation again, basically indicating that consumer in the US is still very strong. CPI for the month of March also beat expectation. So these 2 factors actually reduces the probability of rate cuts. And of course, most importantly, about 3 weeks ago, when US announced ISM manufacturing PMI, the number actually surpassed 50 for the first time in 18 months. The significance of this number is that it actually indicates the manufacturing activity in the US. So if it's more than 50, it means it's expansion. So which means that the Fed may not have the reason or excuse to actually cut rates because of these strong numbers. But again, as I mentioned just now, investors can always roll forward their expectation for another 6 months. And that's why even with very strong numbers, you don't really see significant sell-off in the markets. Normally, I mean, if you follow market in the US close enough, you know that after every big sell-off, investors will come back in. Again, a good example would be a few days ago when Nvidia was down by 10%. The next day, it rebounded 4% again. Okay, political situation in Malaysia. I mentioned just now, the king has actually put his foot down, basically. So there's no more change in government. I guess PM Anwar did have a scare back in September last year when Muda actually pulled out from unity government, leaving Anwar 1 seat short of majority, 2/3 majority. But thereafter, 6 Bersatu PMs have MPs, sorry, 6 Bersatu MPs have actually switched over so that PM has actually regained his 2/3 majority, which means he can actually pass all the supply bills as well as to amend law. So which means there's no issue. We are more concerned about what is actually happening in China. The economy is definitely slowing down. You have slowdown in exports. You have slowdown in consumer spending. You have wealth destruction because of the crash in stock market as well as property markets. You have high unemployment amongst fresh graduates. You even have a deflationary situation developing in China. But we are more concerned about the two crises in China. Number one, property debt crisis, and number two, local government debt crisis. I want to spend a bit more time because these are the things that people don't really talk a lot, but I think it's very important because that can actually pull us down if they do not actually put their house in order. Okay, property companies. I'm sure you read about Evergrande having right now an outstanding liquidation order against it. And for Country Garden, creditors have actually filed liquidation order against them as well. But the Chinese government right now is not doing much. There is no bailout as yet. You have to analyze the situation from four stakeholders, if you like. Number one, the equity investors in this property company. Secondly, the bond creditors of this company. Thirdly, the banking system in China. And fourthly, the home buyers, which like millions of them. The equity investors and bond holders, they're basically taking market risk. So, no one is going to bail them out. The banking system in China, whether it will be brought down by the bad loans from the property sector, answer is no, mainly because the percentage of loans to the property sector as a percentage of the total banking system loan is only 6%, so not very critical there. More critical is actually home buyers because they have actually put down their down payments, but their units is either half completed or not even started in terms of construction. So if all these companies actually go into liquidation, who is going to complete uncompleted units or return the down payment to them? If they are not getting the units or down payment back, that could actually result in social unrest. So that's why the Chinese government is watching. But I think they are just hoping that the company can actually strike some sort of a restructuring deal with the bond creditors, so that this company will still be continuing in operation. They will complete the units or return the down payment. Then the problem is actually solved. But in the worst case, if these companies are going into liquidation, what the government can do is to come in to bail them out. That is something they haven't done before. It's not like something they have not done before. If you remember back in last year around June, the shadow banking in China actually got into trouble. Within 2 months, the government has already instructed CITIC Group as well as the Construction Bank of China to come in to form partnership with Zhongrong. The basically is the ground zero of the shadow banking crisis. So that crisis has been diffused. So if the need be, I think the Chinese government will actually do the same thing. I am actually more concerned about local government debt crisis in China. Why? Because as a percentage of total banking system loan, the number is maybe double that of property sector or even triple. Just to go back history, why or how this local government debt actually came about. It started in the 1990s, but the number actually expanded very significantly during 2008. If you still remember, that was a global financial crisis. The Chinese basically want to shield their economy from the slowdown in the external sector. That's why they actually started this 4 trillion RMB stimulus plan. Basically, they asked local governments to actually pump prime the economy, build roads, bridges, highway infrastructure. The model actually worked. Why? Because after local governments that actually put in infrastructure, highways, the land prices actually went up. With higher land prices, and the local governments, they are actually big land owners. So they basically sold this land to developers, raise the money, and then service the debt. So no issue. The issue came about when property sector in China started to go south, and that was about the time when the COVID actually hit. The local governments also spent a lot more money on healthcare. So that's why they actually struggle to pay to service their debts. Right now, the Chinese government has actually instructed banks to reschedule the repayment of this debt, or even to cut interest rates. You will actually say that they are not solving the problem, they are just kicking the can down the road. But it may it could actually stand a probability of resolving it. Why? Because 5 to 10 years down the road, assuming that the property sector in China is to recover, then all these local government can sell land again to raise money to pay down their debts. In the worst case, the Chinese government, central government, can still actually move the debt as well as asset at this local government level to the central government level. Reason being, if you're talking about the central government debts to GDP in China is only about 21%. In advanced economy, this number is actually more than 100. So in the worst case, they can actually build out all these local government as well. So what we are trying to say here is that China, they do have the resources as well as the political will to clean up their house, to put their house in order if need be. So for that reason, yes, the picture is not looking great in China right now, but it will be contained. There is not going to be so-called Lehman moment for China. So in that sense, Malaysia is actually quite safe. One is fairly worrying right now is the situation in Middle East. I guess you also monitor very closely. You remember last week when Israel sent some drones over to Iran, and then Dow Jones futures was actually down by 500 points immediately. The impact to economy as well as a global situation right now is more like potential additional inflation, as I mentioned just now, because of what happened in the Red Sea right now. All the container ship would have to divert from Suez Canal and go around the Cape of Good Hope. When Red Sea crisis actually started, if you see the charts at the bottom here, the freight rates actually shot up very significantly. For instance, freight rates from Shanghai to Rotterdam actually shot up from 1,000 US to 5,000, almost like overnight. But of course, good news is the rates have since come down, and we expect the rates to continue to come down. Why? Because if you go back to COVID time, you remember there were supply chain disruption resulting in very high freight rates. All these shipping companies were making tons of money during COVID, and they actually placed a lot of orders for new builds during that time, 2021. And right now, the new ships are already coming into the system. In fact, last year, CY23, the container ship fleets in the world actually expanded by 7% in terms of capacity. And this year, it will actually expand by another 8.8%, and next year, another 6.4%. So if without the Red Sea crisis, in fact, the global container shipping sector will actually go into a downturn. And because of this crisis, and we actually need more shipping capacity. So they are okay, and all this new capacity just come in nicely to actually fulfill the need to go around the Cape of Good Hope. So which means that, yes, the situation in Middle East is worrying, but as long as it does not escalate, I think stock markets all over the world, including Malaysia, will continue to do very well. So under these circumstances, we think it makes a lot of sense to stay invested in the markets. And when there is correction, unfortunately, there's no correction, major one in Malaysia as yet. If there are corrections, it's actually a good time for you to actually add your position. We continue to like banks, mainly because if foreign money is to come back to Malaysia again, when the Fed starts to cut rates, be it later part of this year or next year, all this foreign money will actually be streaming into banks. Why? Because banking stock actually command the highest weighting in FBM KLCI index, more than 30%. Construction, we're still positive. As you know, the government has already approved Bayan Lepas LRT 10 billion. And expectation is, assuming that we can actually roll out rationalization of RON 95, sometime in second half, then the savings can go into funding MRT3 construction. So I think construction stock, yes, they have done very well. I think there is still upside at the current level. Oil and gas, we are positive, not so much because of the situation in the Middle East. It is more like OPEC being very self-disciplinary in terms of production cuts, resulting in oil prices staying firmly above $80 per barrel. At this level, is actually making a lot of sense for Petronas to actually be spending more capex. There are a lot of upstream service providers that have actually seen very strong gains in terms of share price. Some already quite close to our fair value, but I think there is also opportunity for you to bargain hunt as and when they're actually undergoing share price correction. For bigger cap company, we actually like Dialog. I think some of you could have invested in that name before, but over the last 2-3 years, it hasn't been really performing because they're disappointed on earnings. But since last quarter, they already started to show much stronger numbers. And then one of the core businesses is actually in storage. They actually own a massive tank farm in Pengerang. The storage rates have actually bottomed and is actually on the way up. So you will actually be seeing much better earnings ahead for Dialog. And we've been recommending this stock to institutional investors because given their size, they can't really buy, like Icon or even to a certain extent Hibiscus. So they have to go and look for bigger names like Dialog to actually invest in. That will be our large cap oil and gas pick. We like renewable energy. There are a lot of initiatives like LSS5, CGPP, as well as additional quota under NEM. So all these EPCC solar contractors will actually be doing very well. The names we like are Samaden as well as Solar West. Tech sector has been a disappointment thus far. Why? Mainly because you look at our players, there are many at the back end, but it is very difficult to time the exact inflection point of the sector. We think better strategy would be start accumulating a large cap liquid name such as Inari. I think we also have other picks like PIE as well as KGB, which are less affected by the downturn, but share price have actually done quite well as well. Okay, coming to our sector weighting, we are overweight on construction, as I mentioned. We like banks, very much proxy to foreign money coming back to Malaysia again. This time around, we actually picked the laggards. What we like are basically Alliance Bank, RHB Bank, as well as Public Bank. Not to say we don't like Maybank and CIMB, but their share prices have actually done very well in first quarter of this year. Healthcare, we have actually changed our pick a little bit as well. Right now, we actually prefer IHH because if you look at KPJ, they've actually done very well. The other surprise, really like outperformer was Sunway Berhad because they are going to list their healthcare units this year. Oil and gas, as I mentioned just now, for large cap, we like Dialog. To a certain extent, we also like Yinsen. Icon, we like the stock. Share price has actually pulled back from more than 80 cents back to about 70 cents level. I think is a good level to go in again. Plastic packaging, we turned positive, mainly because last quarterly result, they already show pick up in terms of orders. Our picks are BB Plastic as well as Tongguan. Renewable energy, I mentioned Samaden and Solar West are the names we like. Telecommunication, very much for earnings defensiveness. I think between CDB and TM, we actually pick TM because TM actually offers proxy to data, which demand is actually going up. We continue to stay clear of glove as well as media. No near-term catalyst here. I know glove stock can actually give you a bit of trading opportunity on and off, but fundamentally speaking, I'm not quite sure I mentioned during the last events. Basically, we are very concerned about what we call predatory pricing by a huge block company called Incor in China, INCOR. Basically, their strategy is to undercut everyone else. Basically, they don't mind selling below cost. They want to force competitors out of the sector. Thereafter, maybe they can actually command pricing power. So far, they have not changed their mind. They continue to undercut other players around the world. Okay, for neutral sector, auto, basically we are quite concerned about the impending fuel subsidy rationalization, which will actually hit mid-market players like B Auto. But I think Grodwa would not be affected because their target customers are actually in B40 group. Aviation prospects have actually improved, but airport, we think pretty much priced in. And AirAsia, I think this evening they are announcing their restructuring. We'll see what would actually come out from there. Building material, a bit of excitement over there, mainly because all copper prices, aluminum prices actually run up in recent weeks. But the reason is very much because of supply constraint, not so much because the demand has actually improved. So in the end, they still depend very much on the outlook of the Chinese economy. Consumer, there is some good news there because EPF has actually rolled out a new withdrawal scheme. You would have read it throughout the day. Basically, it allows contributor to actually take out some money if they move their savings from account 2 to account 3. But again, we look back what happened in April 2022 during the other withdrawal scheme. It actually resulted in a surge in sales of retailer for just 1 quarter. Thereafter, came back down again. So for consumer, we are more inclined to stick with the consumer staples like your F&N, to a certain extent, Mr. DIY. But unfortunately, Dutch Lady has done too well. That's why we actually downgraded the stock. We continue to avoid discretionary names such as your Pardini, as well as Aeon. Plantation, integrated players are still suffering from very low margins from their downstream operation, all these oleochemicals, specialty fats, refining operation because of weak demand. But the upstream operation, i.e. plantation, is actually already benefiting from lower fertilizer costs and to a certain extent better CPO prices. I mean, for those who actually invested in United Plantation, you have seen very tremendous gain in share price, mainly because they are pure play plantation company. I guess the reason why we picked DSH is because they are very much a pure play, meaning that they do not have downstream operation. So this is one plantation name that you may want to consider. Property, I think last time we recommended Marsing to you, but share price has gone up as well. So we only left with MKH. We focus pretty much on low-cost, affordable housing developers. REITs, not exciting because OPR is going to stay at 3% throughout 2024 based on our forecast. Seaport Logistics, actually they're affected by the Red Sea conflict because the shipping liners are making less calls in all ports because of capacity constraint. Technology, EMS, we mentioned second half story there, but we continue to like KGB and PIE, which have actually done very well. Utility, I think YTL Power, our fair value is actually 4 ringgit and 10 cents. To us, pretty much a trading play here. I mean, if you follow the share price, it can actually come back down to 350, 360, and then go above 4 ringgit, and maybe you can take some profits and trade the stock. So this is basically our topics which I basically mentioned just now as well. Banks, we like Public Bank, RHB, as well as Alliance Bank. Telco, we like TM. Construction, we still continue like the 3 players there, Gamuda, Suncon, as well as IJM. We believe there's still easily another 10-15% upside. Oil and gas, we pick Dialog for our institutional investors. I think for retail investors, I think Icon is one of the names that you may want to consider. We don't talk about USMA. It did extremely well. It was one of our topics last round because right now we are actually under research blackout because we are involved in their placement. For auto, MBAR has done very well as well, but we think there's still upside, and the stock actually gives you 8-9% dividend yield, which is not so bad.
Can I stop you a bit and just
Sure.
Can we go back a bit on the this slide will do also. I'm just curious on this property counter called MKH, right? They are actually listing their plantation arm,
Mm-hmm.
which the indicative IPO market cap should be in the range of 600 million
Yeah,
for
I think,
MKHOP.
yeah, I think the
So from
distribution, I mean, yeah, if you own MKH share, you would actually get MKH plantation. I think if I remember correctly, it's 1 for 7. The what do you call the entitlement has already gone extra. So we shall see. We shall see how much the market will actually value is plantation assets or a separate listed plantation company. If the price is actually higher than what analysts are expecting, then you may actually see a re-rating in MKH. In any case,
yeah, because I'm thinking
even
from the angle
yeah,
that
even without the
yeah,
listing of the plantation assets, based on our SOP valuation at the current price of 130, 140, you are basically it's the valuation for their property development business. So
yeah,
basically, the market actually value the plantation asset at zero. Basically, plantation is free.
vice versa, depending on how you
Yeah,
want to flip the
correct.
coin.
Exactly.
That's why
Exactly.
I'm
That's
trying to say
why
that.
we still we retain engage in our small cap picks. As you can see, our small cap picks. One happy problem to us is PIE. When we pick a stock, it was a small cap with a market cap of about 1 billion. Now it has become a big cap. So unfortunately, next presentation, probably I either remove the stock or I put it in my main list. But yes, the stock has actually gone up very nicely. Right now, I think is flirting with the 6 ringgit level, but we think there's still upside. Basically, our valuation basis is in line with Nation Gates, because
Mm.
these are the two EMS player, uh, which can actually give you a bit of AI flavor because they are doing AI related projects. I may as well just carry on with my topics for small cap space.
Yeah,
I'm not quite sure we recommended Carex. We didn't. Okay, Carex
no,
is
last quarter
something
no.
we like. We actually replace some of our picks. Carex is a new entry if you like. We like the stock mainly because they have actually come out with innovative product which actually give very high margins. I leave it to you to Google to find out why it's innovative.
Innovative
And I
condenser.
guess one key reason is the other thing is that after the economy reopening, people start to socialize a lot more again, and when they do so, they actually need more Carex product.
They
It
are more
was a bit
passionate
like
after the reopening, I suppose.
exactly, it's a bit like I would say is anti-intuition. I would have thought, when during lockdown, you actually use their product more. It's not the case. Actually, it's people socialize and only people would start to use their product.
More
So
Euro
Shapewear has actually
passion.
done well, but I think it's kind of like consolidating at 80 cents level. As and when the consolidation phase is over, I think the stock can actually perform. MKH, we talk about that. We shall see whether the
Yeah,
market will actually give
a
their
fair valuation.
plantation units a fair valuation.
Yeah.
Tongguan, look at the share price is still not doing much, but again, I think eventually when they start to show stronger number, in fact they have actually been giving much stronger guidance, then I think the share price can actually perform. Intex. Intex in a way is interesting because it's a proxy to water projects in Malaysia. For those who follow water projects, is on off for the last 10, 20 years. But this time around, it looks like it looks like it's coming because we've been talking to a lot of water players, and apparently they are getting a lot of quotation, requests for quotation from water authority locally. Reason being, I mean, you are basically paying more for your water bill. These local water authorities, they are generating more cash flow. For that reason, they do have money to actually spend on pipe replacement as well as to upgrade their water infrastructure. That's why they're asking for quotation from all these pipe maker. I think you want to position yourself. Good news is index, I think, went to as high as 105, 106. It has actually pulled back quite significantly over the last 3 weeks or so. Right now, probably at about 92 cents is good time for you to, re-enter or, to kind of like build a position in the stock. Icon is our pick for oil and gas upstream service provider, our small cap pick for oil and gas.
On Icon, Joshua, just curious, now that they saw emergence of new shareholders, right? From the Yinson boys, would you think they will go through with the GO, or the
no,
will go lapse, and
there is a GO, but it's at much lower price. So in fact, our recommendation is to reject offer. You would be better off holding on to the shares. And then, of course, previously, Icon was actually owned by some private equity firm.
Equinus.
Right now, yeah, they are getting out. They're selling the stake to Yinson family. Not Yinson Berhad, is the shareholders of Yinson.
Yeah.
And as you know, I mean, they are in the oil and gas industry. Probably they can add value in the sense that they can actually get better clientele for Icon, or even better rates for their support vessels. So definitely there will be value that the new shareholder can actually bring in.
So there is this talks reported on the news many years, and they have been very consistent from the Icon perspective. Is they're always constantly looking for assets that can add value to the company, and they have no qualms of looking to restructure their asset by selling, just like how they sold their rigs, right? Do you think the new shareholders would have something to add value in that context?
Probably it's a bit too early to say. In any case, we were looking at whether Yinson itself perhaps owns any significant support vessels. They do have some, but they are pretty small. So the theory is suggesting that maybe Yinson want to sell all this OSV to Icon, but actually there's just no need to do that because it's not going to move the needle as far as Yinson perhaps is concerned. I guess the other thing we have to be very mindful is that support vessel business is actually highly cyclical. Right now, it's certainly on a
peak cycle,
up cycle. I mean, if you follow the IPO, Keyfield actually did extremely well. First day listing more than double in terms of share price. But we actually cover Keyfield, but right now it's actually kind of like match our fair value of 180. What I would like to emphasize is that in terms of valuation, in terms of maximum valuation, you're talking about 10, 11 times PE for this kind of sector, mainly because they are highly cyclical. So I think, yeah, for that matter, you see, if you want to play Keyfield, I think the best strategy is to buy on weakness since they are very much, hit our fair value already. But Icon, there is 10 cents to go from the current level of about 70 cents.
Okay, thanks, Joshua.
Yeah. How much time we have? What time is it now?
We still have close to 20 minutes, and
shall we just do Q&A? I think we can most of the sector.
We can jump to the Q&A. For those that actually have questions, you can actually type it in the chat box, and I shall start with the first question from Steven. Steven's question is, what's your take on sell in May, go away? What's the probability historically in this cycle, and how is it affecting the market? Pullback or correction? So probably I throw the question around for Steven is like, before the start of the webinar, we are going through the picks from last quarter, and I realized that we have a handful like PIE, OCK, USMA, Suncon. Well, Inari is still looking to perform. We are waiting for it. KPJ has all did really well, especially like USMA is almost double also. So The context is if you have participated in all these stocks, and what would be an more palatable approach to the market? Should we take some profit from these positions and recycle the gains into those that's on a laggard because the potential is yet to come?
I think in the end, we will still go back to fundamentals. Like I mentioned just now, like construction stock, right? They've done so well, but again, there's still upside. Reason being, the last round, when we saw all these construction boys, they're actually guiding their expectation in terms of job wins higher, which means that they feel good about the market. So for that reason, we actually raise our expectation accordingly. So in other words, there's no fixed rule, but we really want to monitor the situation very closely. If the construction boys are telling us they are actually placing for more contract, we are not going to cut our recommendation. In fact, we will actually raise our fair value and as well as earnings.
Okay.
So yeah.
So there's a more bullish in despite moving into May.
Yeah, in the end, we would have to drill down to what actually happens to that particular company. Like for instance, PIE, they are guiding for new contracts in billions. So whatever fair value recommended before is no longer valid. So we have to relook at the fundamental of this company and come up with a fresh valuation. Of course, if the fair value, if the share price has actually run ahead of fundamental, then no choice, we downgrade our stock. I mean, we actually downgraded quite a number of stocks this time around. When they hit our fair value, and we find it very difficult to justify for the upside, then that's when you should actually take some money off the table.
Yeah, that's what I reckon. Rather than just waiting for May, right? That will be more palatable. That with the gains, we can actually recycle a bit to the laggards.
Okay, actually, I have some. I happen to speak to our foreign partner, some salesperson with our foreign partners, just on this sell in May thing. In fact, it's not unreal. In fact, this really happens. This cycle can actually happen. What happened is that May, June, July are basically summer months in Northern Hemisphere. And all these fund managers, they can actually go on summer break. More so this year, the markets have been doing very well. A lot of them have actually hit their targets. So it makes sense for them to actually lock in profits and go on summer holidays. He was actually telling me the month of May is not so bad, Lisa. There is still quite a fair bit of activities in the month of May, but June, July, it will be very quiet months, in all these overseas stock markets. But Malaysia, I don't think we have summer holidays here. Like every day is summer anyway. So I think, in a way, if you look at this market, we don't even we basically decouple ourselves from overseas market anyway. So as long as companies still continue to deliver earnings, we would actually be watching very closely next month when all these companies announce their results. If they do deliver their numbers, I don't see the reason to to reduce your position in May. But I'm more inclined to encourage people to wait for any correction to add your position. Why? Simple reason. We all need to make money, and we have a window between now and November. What happens in November? US election. Who is going to be the next president of the United States? You know who? He may actually wreak havoc. So maybe 1 or 2 months before November, you would have to start thinking about trimming your position. That's my view.
Okay, that's a good one. Let's move on to the next question. There's this question from Jackson about your view on OSK. I don't think we cover it, but
no, we don't have a view, unfortunately.
Yeah, we can't, Jackson. Very sorry. probably we can try to check it out in the future.
Yeah, we can actually give technical view, but not fundamental view.
Probably later, if I have a bit of time, I can entertain on
why
the
not?
technical
Yeah,
view,
we
because
can provide a technical view.
I do give a weekly session.
Okay,
So,
maybe I just explain why we are so particular about commenting on stock if we do not cover or do not have access to management. Because all our valuation are done on the basis that we have actually direct access to the management of the company. They give us guidance. They answer our question. Only then, we build our models and come up with valuation. We don't really recommend a stock based on public information. Why? Because we actually service all the big institutional investors, and they can actually ask us question like, when was the last time you saw this company? Can you show me your model? So we don't take risks. We are very fundamentally driven.
Yep. And that also means that we follow our coverage very diligently, and most of the coverage are all rated, right? Yeah.
Yeah.
So jumping to the next question is, there's this question from Alex. Why is there no Johor team play stock recommended? And what do you think about names like SP Sathya, Marsing, Ecoworld, Sunway, IOI? Are they actually overvalued?
Okay, good question. We are very much contrarian in the market. Yes, all these stock property, Johor-based company actually did very well last year, and even year to date, they've done well. Key reason, not so much driven by earnings, is because of the positive development in Johor. As you know, there is going to be a special economic zone in Johor, and then Johor has become a place that is attracting a lot of investment in data centers. For that reason, land prices, at least your perception on the land prices has actually gone up. So if you look at the re-rating of these property stocks, or even to a certain extent plantation stock with plantation in Johor, the re-rating is mainly to reflect a higher land value. But if you are talking about earnings, you just go around and ask them, are you going to launch double your new launches this year? They'll shake your head. They'll shake their head because the demand is not there yet. So in terms of stock market investing, the first round of re-rating has already taken place. In order for the second round re-rating to actually take place, you need to show earnings. And the earnings are not going to come in over the next 3 months, 6 months, not 1 year, not even 2 years, because your RTS will only come into operation in 2026. So for that reason, I think the share prices are kind of like not going anywhere. At some point, I think some people who are actually sitting on a lot of profits, they will get a little bit impatient. They will start to take profits, and then share prices can come down. But of course, if you are patient enough, maybe you wait 2 years for the earnings to come through, then you actually see another round of re-rating.
Yeah. Okay, so consider that answered. There's this unknown user. It feels very funny to call out an unknown user. Probably a glitch in registration. If probably you can try to check it out. But I prefer to know you guys by your name. But anyway, unknown user, hi. Fatong Tiguan, why is it in the top picks despite it's performing so badly? Let's qualify the question. Do you mean that in terms of share price, or do you mean in terms of earnings? I would believe the earnings would be not too bad. If not, it wouldn't be in the pick, right?
Okay. Yep. I know what he meant. I think probably he meant share price. I mean, you look at the chart, you can tell. Yes, reason why share prices not doing much is because of earnings disappointment when there was a slowdown globally, especially in China, resulting in lower demand for their product. But these guys are very driven, I would say, and very innovative. They actually invested very heavily in R&D. They actually come up with all these nano stretch film, which is more environmentally friendly. Why? These stretch film are actually thinner, which means they actually use less material to actually make the same, measurement of film. It's actually recognized even in Europe. I mean, it is kind of like ironic in the sense that plastic itself is actually not environmentally friendly. But
Yeah.
we cannot live without plastic. You know, you need so much plastic for packaging. You know, you go to airport, you want to wrap your luggages. You know, you want to export your stuff. You know, you have to make sure that they are firmly secured on the pallets. So you need a lot of plastic. So in order to make yourself more environmentally friendly, if you can use less plastic, then it's a plus point. I think everybody recognizes that. And they come up with this nano stretch film. That's one. And secondly, you know, energy costs in Europe is sky high. Even gas prices have actually come off, it's still sky high. They are actually, the plastic packaging industry are actually dying off because of high costs. We are doing okay because our cost is pretty much still under control. So people like Tongguan, they actually marketed their product very aggressively in Europe, especially. They even set up R&D center in Europe. They're appointing a lot of agents or even train their own people to market the product to all these industrial in Europe. So even in a down market, they're actually gaining market share against their competitors in Europe. And if you ask me, if you want me to pick one plastic packaging company that will still be around 5-10 years from now, I will pick them mainly. Why? They're willing to spend on R&D. That's how you can actually remain relevant in your industry.
Okay. Hope that answer your question, unknown user.
Yeah, basically, I just wanted to add is that we recently met up with the company. They actually gave us a very strong earnings guidance. There is a pickup in orders, as I mentioned just now. But only question is, you don't know the pickup in orders is because their end users actually restocking or there is a real recovery in demand. That is the question we cannot answer at this point of time. We have to observe for the next few quarters to see whether this is just a one-off restocking or it is a recovery in the demand from the bottom.
Okay, that's a good one. A bit off topic. Why would we say the next president will wreak havoc? I think we'll skip that first. We jump to Tay Ken Lang's question. Do you think that EcoWest is a good proxy for recovery play? Obviously, we don't cover that, but yeah.
Again, I think since we don't cover, we rather not to comment. Maybe technical. Yeah.
Yeah, probably I can entertain on the technical side if you have time, Ken Leong. Ing Huat's question will be on, is there any insurance company that's worth looking at?
I believe we do have a buy for this one. Interesting because we hardly get question. This one, I don't have the answer for you right now. I think we do cover insurance stocks. We shall get back to you.
Yeah.
Yeah, because I kind of like lost track on our recommendation on insurance stocks.
Yeah. Ing Huat, you do follow us very closely. Probably I can.
Yeah, I mean, you can actually find our reports.
Yeah, I can touch base with you offline. There's this question from AK. How about gold-related stocks? And same question from Lee also, Singguan also is, do you cover gold-related stocks? And if you do not, probably I add on to it, why not? Right.
Okay. We are basically doing research on equity. We are not multi-assets research house. We don't really have a view on gold, but of course, those who actually bought gold, physical gold, or even ETF, even gold stock have actually done very well. Well, suffice to say, there could be interesting names that you can actually look at, which can actually give you a little bit of proxy to go in. This will be the pawnbrokers, because about 85-90% of their collaterals are actually in the form of gold. And if the person does not come back to redeem the collateral, they actually can take over the gold collateral. I think thus far there are 2 listed pawnbroker on Bursa Malaysia. We are actually listing the 3rd one. You go and find out what's the name. I can't talk about it because it's also under research blackout. Yeah.
Probably now that people ask about gold stock, right, and we have a bit of a time, for our years as analysts, I mean, I've been in the analyst with you also for almost more than 10 years, right? We don't see brokers do look into coverage for gold sector. Do you think that is because of their earnings volatility's nature?
Okay, I may not have enough knowledge to answer this question, but I will actually try to. I believe some of the gold stock listed on Bursa Malaysia, they may not even own the gold, the inventory, because those could be on consignment basis. So that means it may not actually give you, proxy to gold price. I mean, there are some gold miners listed as well, but I think in terms of scale, they are a bit smaller. And then we are also concerned about corporate governance of this company. So yeah, I mean, the other reason is all these mining related company, they are just not sizable enough to attract institutional investors.
Okay.
Yeah, but of course, no denial. Gold is definitely a very good asset class. In fact, these days people are talking about spreading your money across different asset classes like even Bitcoin, even crypto, even gold. Yeah, I mean, but we are basically specialists in equity.
Equities.
So yeah, we don't really have the knowledge and capability to predict gold prices, for instance.
Yeah. So coming back to Sing Guan's question, he has actually 2 questions in one. Do we cover synergy?
No, we don't.
Yeah. So probably we'll look into it. It has, I think Synergy's chart has trying to chart a new high already. Okay, next question is E from E. Now I'm quite interested to find out what E stands for. Would you be able to share a bit more insight into East Malaysia's situation as below the news of growth there? Can you help us understand like companies like CMSB, Biport, KKB, or probably more upcoming boys in Sarawak?
Okay. Sarawak, we just went there about a month ago to check out what is actually going on. There are major public infrastructure project ongoing there. They are pretty serious about doing LRT, automotive, rail transit. Basically, these are a bit similar to LRT, but it's actually on EV. They already dish out the contracts, so they are going to do it. The money is also ready. And then, of course, you read about them developing a hydrogen economy there. Problem with Sarawak is that there are not many proxies, not many stocks that you can buy. We don't talk about CMS because CMS is basically our shareholder. We met up with KKB. Prospects are actually looking quite good. Actually, more so right now on their oil and gas fabrication side. We struggle a little bit to recommend this stock to institutional investors because there's no liquidity. But I think for retail investors, there's no issue. I think this is one of the names that you should actually consider. Of course, the other name that is getting more traction or attention is actually Bina Puri. I mean, for most of you, probably you remember Bina Puri as a peninsula-based company who actually built the new KLIA2, I believe. Basically, there is a change in control of that company. There are some Sarawakian contractors, Sarawak-based contractors, who have actually gained control of the company, which means that Bina Puri is more like a Sarawak play right now. I think they have a significant order book. They do have some property project in Sarawak as well. I believe what they plan to do right now is to do share consolidation. I think share price is in single digit right now. So, it's a bit hard to trade when your share price, let's say your share price is 7 cents, the next bid is 7.5 cents. It's like, I don't know how many percent you can actually calculate. So I think the plan is to consolidate 10 to 1 so that you have a, more decent share price, then it will actually encourage trading in that stock. Thereafter, we will see what would be the next development, whether they are getting more contracts. I would say we don't kind of cover the stock at the moment, but it would be a Sarawak stock that you want to put on your radar. After all, there are not many Sarawak names that you can actually buy. I mean, for those who are long timer, you remember this stock called Hoxingly, but that has been taken private.
How about Naeem, Joshua?
Naeem is a proxy to property sector. I think basically if the economy is doing well, you are attracting more young people coming to work and stay in Kuching because the public transport is a lot better. And then, in fact, I hear that they are actually talking to a major private healthcare operator in Peninsula to actually set up a big private hospital there. So I think as and when you make Kuching more livable, metropoly, you actually attract people to actually stay there for longer term or even eventually migrate to Kuching. That would actually create demand for property. So I think names like Naeem would actually benefit, but maybe not directly. So it takes a bit of time for the population to come in, then they will start to look for houses. So yeah, I think no, the trick is very simple. You just have to develop the economy. Otherwise, nothing moves.
Yeah, and they are also the major shareholder of Dayang, if I'm not mistaken. Yeah. Okay.
Yes, I think, but for names like Dayang and Petra, they are very much oil and gas play.
Yeah.
Yeah, I think we also can't talk because we are on research blackout as well.
Yep. So okay, we are running a bit short. Probably I will just close two more questions. Sorry for those that came later on your questions. Lee Min Ho, I love this name, man. I mean, this is a famous name, Lee Min Ho. And I like the question. Please just give us 3 names, high conviction picks. Tomorrow,
okay, let me see.
I like direct questions.
Okay. Not easy, put it this way. I think I would actually put my money with Dialog. That's one.
At the right price.
Intex is a stock that I quite like. Intex. More so, the share price has actually
tapered
corrected.
Off, right?
Yeah.
Share the same
and
view
then
too.
Maybe one more larger cap name. I think these days you see better performance from large cap.
Would you take Inari as a laggard, as a play? Because what I observed recently on the market is the tech boys, right? They're really trading off low, setting up a stage to perform. Yeah.
Okay, I actually tend to pick Gamuda. Share price has actually consolidated quite a lot for a good reason that it performed very well in 2023. Since then, they actually announced quite a number of contracts, but the market has not really like fully reacted to that. Yeah. It's more so, I think, a lot of investors, they are actually sitting on fairly big position at rather low entry prices. So it becomes very attractive for them to actually lock in profits. So I would think this is one stock that can actually perform very nicely for the rest of the year.
So Joshua, just come back on Gamuda. I mean, we both covered it during the peak of the MRT cycle, and Gamuda actually traded close to the KLCI valuation then, which is almost 17%. Now, a quick look at the multiples of Gamuda. Despite growing its base so largely to overseas, where more than half or probably more around that region, the earnings contribution is actually coming from overseas, right? I mean, technically it should be valued higher than the MRT cycle peak, right? I mean, logically speaking.
Yes. Well, as far as earnings profile, it has changed. It has become a lot more stable.
Yeah.
And then they are actually doing very well in Australia
Yeah.
because they are basically fighting with the high-cost Aussie construction companies. In fact, I hear a story about why they are very welcome in Australia, just to make sure that the local boys would actually be you know, be more competitive. Yeah, basically, I think basically the local boys were a bit too comfortable with what they're doing. So the government actually want to bring in some worthy competitors so that they can get better value for money for their infrastructure projects. And one more thing I want to mention about Gamuda is if you look at their foreign ownership, right, it's still quite close to all-time high.
All-time high?
Yes. Sorry, all-time low.
Okay.
And in fact, this is one of the stocks we try to promote to foreign investors. The moment foreign money comes back into this stock, you know, the share price is not going to be at the current level.
It's going to be fantastic.
So this is basically the valuation without much foreign participation in this stock.
Okay, that
it was one of the darlings last time for foreign investors.
Yeah, all right. So probably the last question, well, we'll have a gorgeous lady. We can't let a gorgeous lady. Okay, probably we just jump to the last one, E. You spoke about PIE. What about SK Press? They've fallen over 50%, have bigger space now. Dyson, Peru results. Do you perceive recovery being seen?
Okay, we don't cover SKP, but our general comments is basically those who are doing mostly consumer electronics, they are not doing so well, mainly because of the, you know, weakening consumer spending globally. So if you look at people like PIE, they are doing a lot more industrial. They even do like mining machine. So that's why we actually prefer, since last time we prefer PIE over all those guys who are doing consumer electronics. I think without exception now, all the CMS players who are doing consumer electronics, they are not doing well at all because that basically depends on the health of the global economy and consumer spending.
Hi, Minho. I think we have very different profile of customers, so I guess we have a feed for everyone. Okay, so I think I'll stop the questions, and I shall not let the lady wait too long. I mean, it's a sin. All right. So thank you, Joshua, for the night.
Okay, thank you, everyone,
for your time. And may I invite Isabel for our call warrants training. And I'm really sorry for letting you wait for a while. Huh? Okay, welcome.
Thanks, Adrian. Joshua, excellent session. I really enjoy it as always. And you know what? I'm just going to get started. So for all of you who have joined us before, my name is Isabel. I'm the head of retail equity derivative sales, and I'm also a warrants issuer and a market maker as well. So for all of you just saying hi for the first time, can you just put 1 if this is the first time you're hearing from me, 2 if you've heard me twice, 3 if you heard me 3 times, 4, etc. What I'm going to do is I'm going to offer you the supplementary. So Joshua's section, he's the research Japanese omakase. And my section, I'm the warrants wasabi, right? If you want some spice in your life. So mainly, his fundamental view, if I can maybe rephrase Liho's question a bit just now, is a fundamental view tells you what to buy, but a technical view tells you when to buy it, if that makes sense. So we're going to cover that in a few more in a bit more right now. So I'm going to share my slides. Oh, great. I see a few 1s, 2s, 3s, 4s. All right. In that case, in the next 20 minutes that I have with you, I'm going to cover things really basic and as quick as I can. And I'll make it as enjoyable as I can without too much trauma to your brains. All right. So background, that's a disclaimer background. That's me. And so Naga Warrants by Kenanga Investment Bank. These are all the things. I'll send over the slide to our Telegram chat. If our admin can send that out. We've got a Telegram channel and we've got a private chat. So the Telegram channel, it gives you what are the best-selling warrants for the day, etc. I see a comment over there, but let me get back to that later. I saw Isabel, something attractive. I just assumed that it's Isabel being attractive, right? No, I read your comment. I'm just teasing. So tonight's agenda. First bit, we're going to cover a new strategy. It's called Fata Naga. And the second thing that I want you to do after this is I want you to vote for your topic. So I'm going to be covering two main things this evening. One is a brand new idea that you guys are seeing for the first time. Oh, fancy. I managed to do a balloon. And the second thing is, for those of you pressing now, if you press 1, 2, or 3, the one that gets the most votes, I'll be covering. So the first topic that you can vote for is, cannot call warrants go down as the mother share goes up? Second topic, what do warrants issuers do? And the third topic you can vote for is, how do I use the last defense strategy? So you can vote for your topic, whichever you want to learn a bit more, and I'll cover that right at the end. Another thing is that we're giving away a few Shopee vouchers. We're giving away 5 Shopee vouchers. So there's going to be a link that comes up as well. Thank you, admin Megan. If you share 3 key takeaways on the Facebook post, whichever Isabel thinks is the best key takeaway, right? If you write 3 of those, then we'll be choosing a Shopee voucher winner. We're giving away 5 vouchers. The deadline is tomorrow, 5 p.m., Friday 26. All right, so if you want, you can scan over here for the Naga Warrants Telegram channel. As you can see, it's the list of our highly traded warrants for the day, and as well as the warrants which we're offering on bids, which I'm going to share with a bit later on. The second channel, we've got 2 telegrams. Remember that. First one is a channel, which means it's one way, right? It's a broadcast. This second one is a private chat, where if you press it, it's like WhatsApping me and my team, and no one else can see a private chat with us. It's just a one-to-one thing, all right? If everybody is okay and you can see my slides, please press Chantik or okay. If you can't see them, please press that you can't see. Okay, so today's section, we're going to do the Fata Naga section. Fata Naga strategy, actually. So just now, like I said, fundamental analysis. Mr. Joshua, he gave you his top picks, right? And these are the fundamental selections. What is good to buy? What I'm going to offer you is how to get a different approach to it. For example, structured warrants, they are a beast. Even though they are my favorite child out of my portfolio, and I was a day trader for many years before I was an issuer on the other side. The thing is, structured warrants, unless you know exactly what it's for. For example, structured warrants, they are if you have a limited capital to invest in shares, you have a smaller capital outlay, therefore you want lower transaction costs and commissions, you want to diversify your portfolio, or you want to free up capital invested in shares, you want to take profit and maintain your exposure, then you consider structured warrants, because structured warrants have a lot of really complicated things, such as expiry, volatility, and all of that. But let's say the first thing that I do, right, is I look at fundamentals. So if you know me by now, I'm an incredibly, I like to think, efficient individual. So I would do Mr. Joshua's top picks, and immediately I would just zoom in. And I would look at what he likes, right? He's already given us the what. So he likes public bank, especially dialogue. And for me, I am greedy. So I will look immediately at the upsides and I would say, all right, dialogue 34. We've got, he likes RHB over there, 27 percent upsides. He likes Inari, 26. And these are the non-Sharia, I mean, it's the conventional. And then the Sharia, he seems to like CDB with the highest upside. That's it. That's all I care about, right? And let's say dialogue again. So immediately my focus is, I want the highest upside, right? Everybody with me? So then I would go to nagawarrants.com, the Naga matrix, and I would immediately pull out these on my matrix. The dialogue warrants, the RHB warrants, the Inari warrants. So what do these even mean, right? Let's get into the Fata Naga strategy and let's try to explain this a bit better. So earlier, Mr. Joshua, he mentions fundamental analysis. That's this bit. He's telling you the what. So when you plus fundamentals with technicals, technicals tell you when. So I gave this example of CDB, but since Mr. Joshua is so pro dialogue, I'm quite glad that I actually prepared dialogue for you guys as well. Okay. So digging into technicals, because technicals are my baby. I like knowing when to buy things. I'm from Penang. I like to buy things at a good price. So fundamentals, and then after that, we've got technicals right over here. And then we've got the Naga warrants, the warrants that you can get better leverage on. So if I zoom in, what I would do for my technical analysis is I would have 3 time frames. I would have a 1-week candlestick time frame. I would have a long-term 1-day candlestick. And then I would have a 1-minute candlestick to determine exactly my entry point. The platform I'm using, before anybody asks, is TradingView, because I know that retailers can access that quite easily. So I'm going to zoom in as much as I can. The first thing I would do is I would zoom in technically. Since the beginning of time, dinosaurs, when Dialog IPO'd, that's back in 2003, I would immediately notice that, you know what? I'll pull up a Fibonacci retracement. I'll notice that Dialog 61.8 hits here once, rebounds over there, and it likes to follow this green moving average. I believe it's a 50 or 60 day. I'll check out with you. I don't use the moving averages on the weekly chart. Then I would go in and zoom in. Now, this is where the trading rules come in. So an example of a trading rule that I realize a lot of our warrants traders tend to forget is that you need to really stick to your trading rules. So an example of a trading rule for dialogue is enter when price is above 20-day EMA and above 50-day EMA. So if I had followed that, I would have entered over here and exit when there's no higher high. That means this is a high, this is a higher high, and there are no higher highs. Does that make sense? If anybody is into TA, press TA. If you have no idea what's going on, press WA. Like, what is that? So let's say, first thing, when price is above the red line and the green line, that means it has to be like this. It has to be, where's my green color? Has to be green. You see this green line, followed by the pink line. That's the 20-day, and then followed by the price. So it has to be in this particular order. Then that's your trading rule. If it doesn't show this, then that means you just stay out of the market. Easy as that. That is what a trading rule is all about, okay? So you can notice really easily that Dialog has a tendency to like to hit the same resistance a few times, which is a signal to exit for Dialog in this case. So if I look over here, it hit the same price 3 times. Technical analysis folks, what do you call it when you hit the top 3 times? Here, it hits 4 times even. That's not even such a trading pattern. So my chart pattern, folks, what do you call that? When you hit a top 3 times, it is a reversal pattern, which means you get out, right? That means the trend has changed. Same thing, once you see the green color line I mentioned. Why does my pen not have a green color today? So let's say you've got the, no, it's not Head and Shoulders. Come, my technical folks. So if you've got the green color line, that's the 50 EMA. And you've got that pink color line, which is the 20-day EMA. Thank you, triple top, whoever mentioned that. Well done. What are the tips to trade Hang Seng call and puts? That's not today's session, even though Hang Seng is my favorite thing to trade. But that'll be our next session, all right? If you'd like us to have a Hang Seng talk soon, just press HSI in the chats. Our admin will count how many HSIs and we'll have a talk on it. So let's say, if the price is going up, if it's going down like that, then that means it is a sell signal, isn't it? Because it's below the 2 EMAs. So you can see the price here is below the 2 EMAs. That means it's the whole time, they are all sell signals. So that time you are totally out until you see it hits the fiber again. So anyway, I'm not here to lecture you on technical analysis. That's just the basics of how you would analyze the when. So would you actually, if you're technically sound, would you actually be buying Dialog through this entire period of 2021 until 2022 middle? No, you'd be out. So there's no point in even considering call warrants because right now it doesn't suit your trading rules. Does that make sense? So now only when Dialog seems to have this very fascinating thing where it does almost a double bottom over here at the 5 lines, right? It shows you that it is doing a bottom here. And when it hits it again, it rebounds and it crosses the green and the pink. Something interesting is going on, technically. So then what I can do, I'll consider looking at the 1-minute chart and I want to see how much it moves within a short period of time. I can see within a range of from the 12th of April until today, the 25th or so. The range was 225 to 240. So then I look at the 2 Dialog warrants that are available on nagawarrants.com. I've got Dialog C1E, which is fairly a lot of ticks. So how do you calculate ticks? I would look at the gray and white zones. So if I look at Dialog C1E, I can tell that this is the bid price. This is Dialog's bid price. This is Dialog's offer price. This is Dialog C1E's bid price. This is Dialog C1E's offer price, right? Dialog has got this white color zone. So change color. Dialog has got 1, 2, 3, 4. That means the price over here is always 4 cents. That means as long as Dialog is 249 on the bid, 250, 251, 252, it will be 4 cents. Only when Dialog goes into 253 on the bid, 256 is 7, then the bid price for the warrant changes to 4.5 cents. That means it increases by half cents. Let's say if Dialog drops down to 248, 247, 246, 245, 244, then it stays at 3.5, 4 cents this entire time. So maybe this Dialog C1E, it takes a while to flip, if that makes sense. It doesn't move very fast as compared to Dialog C1K over here. Even though the absolute price is much higher, over there it was roughly 3 cents. For this one, Dialog C1K is approximately 15.5 cents. But let's say I'm looking at this bit over here. The white zones, that's 2 ticks. The gray zone, it takes 3. Here is 2. That means every 2 cents that the underlying moves, the warrant moves 1 time, right? Chinfu, no, I don't post my warrant picks on Trade to Win. We have a separate channel because it is a separate demographic. Not everybody has the grit to trade warrants. All right, so we've got that bit. Now the next part, when it comes to the strategy, is these are for the basics, the ones of you who have just joined us for the first time. These videos, they're all available on Naga Warrants, but I did promise you earlier, we covered the Fata Naga strategy, right? Once you look at the fundamentals and the technicals, then you go into the Naga Warrants for it. But I did promise you one thing earlier, which was, let me just double check. Number 3 has the most votes. How do I use the last defense strategy? Oh, you guys don't know how to use the last defense strategy yet. That's a surprise to me. Okay, we can cover that. I'll cover that in this next section. Is nobody keen for number 1? Can a call warrants go down as the mother share goes up? Nobody's interested in this bit. I thought this is the most fascinating bit of all. Okay. Your wish is my command, guys. So let's get into the last defense strategy. For the beginners, you can check out our videos on YouTube. I'll explain all of these, the ingredients of structured warrants, expiry and structured warrants. Remember, with these days, it is 2 days before expiry. It always does. You kill us slowly with decay. I kill myself slowly with time value decay. That's why I never recommend holding a structured warrant until expiry, right? Let's say there's a question that I just saw in the chat. Chinfu mentioned that a structured warrants, for example, this is a 1-day candlestick, right? Structured warrants, you're not supposed to hold them until expiry. I'll give you an example. If the structured warrant is expiring here, let's say January 2023. So you have different structured warrants that exist over time. Some of them exist here, 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 and so on. Right, the lifespan. You would always avoid the final month. Okay, so time value decay and theta, same thing as well. I usually cover that in my musty strategy, which nobody has asked about. But time value decay, we can cover that in a bit later on. Let me just get to the last defense strategy because I have 1 minute left on the clock, guys. All right, so last defense strategy, due to popular demand, let's use Dialog C1E as an example. So I've got Dialog C1E. I've labeled it earlier because I knew that I won't have much time with you guys. So if I look at Dialog C1E, remember I mentioned ticks, right? If it's a white zone, for example, here, as long as Dialog C1E is 229, 230, 231, 232, 233, it is always going to be the same price, 3 cents. So the last defense strategy is a last in, first out strategy. If any of you have done inventory management in your business or business management degrees. So last in means I wait for the last possible time to enter a warrant, and I'm the first one out as fast as I can target price. So look at this example for Dialog C1E. If I want to buy Dialog C1E at 3 cents, that means I have to be waiting for Dialog to be 228 over here so that the warrant will be 2.5 on the bid, and I want to buy at 3 cents. So the last possible time I can buy it is here, 3 cents. Because why would I want to buy it when, say, Dialog's at 225? And I can still buy it at 3 cents. I want to wait till the last possible minutes before the train jumps off, and then I jump in at the last moment. Because I know that at 225 to 228, that means maybe there's some momentum over there. So I'm waiting for that last possible moment before it flips, before the gray becomes a white or the white becomes a gray. So that means I'm waiting for the last possible moment for it to flip over here. You see that? So that's my entry price. 3 cents right when dialogue is at 228. What happens next? Whenever you're trading, you need to know three main things: entry price, target price, and stop loss. First thing I do before I even consider trading is I actually start putting in my stop loss already. So I would put my stop loss right at the bottom of the matrix of the gray or white zone. So I'll be putting a stop loss over here, following the Naga matrix. Because I know that dialogue, even though I bought it at 3 cents, it can fall from 223 all the way to 218. Why would I want to stop loss over there when I know it can go all the way to 216? Maybe it might rebound off there. And I know that it'll still be 2 cents. I can still exit. And for target price, right, the third thing that you must do. So my stop loss is right at the bottom of the matrix, but my target price is immediately when it flips. So my target price, I would put it right on this bit. So let's say my TP is either 3.5 cents or at 4 cents. Why would I want to TP at 235, for example? But I know at 234, the warrant is already going to be 3.5 cents. It's going to stay at 3.5 cents this entire time, unless my TP is 239. If everybody is okay, please say okay. So that really is the last defense strategy in a nutshell. All right. One final thing that I want to share with you guys is we have a new, actually not a new thing, we've actually had this for quite some time now. It is called sell on bid, when we are keen to sell on bid. So when I'm keen to sell on bid, what happens is this. I will actually look at this price. I will look at the bottom of the matrix. So whenever it has many ticks, for example, 5 ticks, the issuer may be keen to sell on bid price. So when it's on bid price over here, the bottom level of the matrix, usually you'll have to buy it one price below. But if you queue over here at the bottom of the matrix, that means the lowest level, the issuer has the option to hit you. So that means, let's say, if you wanted to buy it at 3 cents over here, and you queue right at the bottom, when that means dialogue is 229, the issuer, such as myself or my team, we are happy to hit you at 3 cents. And the reason we do this is because instead of giving you, most people will enter over here to get 3 cents, right? That means if you actually get the price here at 3 cents, you're immediately breaking even. So even if you sell it back to the issuer immediately, you are breaking even on the spot. So you're not going to be down 0.5 cent as compared to you buying 3.5 cents or higher. So you are immediately breaking even. So that's more attractive for traders. Yeah, so that covers everything I want to cover tonight, actually, because I only had 20 minutes with you guys. I'm just going to go through the chat really quick and see if I missed any questions. And finally, oh yeah, I just wanted to share this bit. The Naga Warrant is available on nagawarrants.com. And of course, you can check out all our YouTubes over here. We answer all of these questions, and the YouTubes. Can the call warrants go down as the mother share goes up? We can share that link in the chat because some of you might not have time to, I didn't have time to go through it today, and I want you guys to sleep for tomorrow's market. So that covers it for my section. Thank you very much. And if you have time, we can go through one or two questions.
There's one from Yok Lung. Any warrants for Nestle and Aeon Credit?
No, unfortunately, off the top of my mind, but as issuers, we are very happy to issue warrants whenever there is strong market demand. So if there's market demand for it, let's say you want to buy 5 million units, message us and we'll be happy to consider.
Okay, so in the sense that if there's a buyer with that demand, you can consider it.
Yes.
Okay.
I am in the business of selling warrants. If I think it's attractive and if people will buy it, I'm happy to consider issuing it.
That's interesting.
Yeah. All right,
Okay.
next one.
One question from B. Kim. Is theta important?
Yes, definitely. So I didn't manage to cover this today, but we do this in a lot of our other talks as well, where I actually tell you all about structured warrants time value decay. And what I can do is tomorrow, if you join our Telegram, I'll post the video up because I don't want to bore you with the details right now. We don't have time. So what we can do right now is you just join our Telegram and tomorrow we'll send the video up more on time value decay and how you can win, how you can fight the battle against expiry in an efficient way.
And guys, I've pinned the link to join the Telegram channel, so you can help yourself there to click on it and join, and you can actually get your answer to the theta.
Yeah, the main thing is time value decay is like a waterfall. It is fastest at the final month of expiry.
Wow.
You don't care about whether a warrant expires or not. You just want to be able to make your money when it hits a TP, the underlying hits a TP, and then you're out. If the underlying does something that is uncertain or not attractive, then after that, you just have to do it a certain way. You just have to exit immediately. Chinfu, price your warrants more attractively. I think my warrants are quite attractive, but feel free to message us on the Telegram private chat. We'll send it over, and then you can tell us how we can do our jobs.
Thanks, Chinfu.
All right. Anything else I can answer? I see a lot of tips on trading HSI call or put warrants. LTH, my quick comment on that is that for intraday trading, okay, there's two ways to trade Hang Seng. Number one, there's a really nice channel consolidation that is forming, right? For medium-term traders, if you're holding 2-3 days. But if you're trading intraday, my best tip for you is that you hands off your keyboard from 9 a.m. until 9:45 a.m. I know it is so tempting to trade during this time, but my number one tip for Hang Seng is hands off the keyboard until 9:45. Let the chart tell you what to do for the day using a 1-minute candlestick chart. After you can, how do you draw a line on Hang Seng Index? You need 2 dots to draw a line, correct? Once you can get those 2 highs or the 2 lows, then you can draw a line and then you can see where the pattern is going for that day. I don't know why I like to have balloons coming up. I mean, like, is it hearts coming up now? I don't know. So that is my main tip, LTH, because I know where I press for time, that is the main thing. And congratulations to the trader that mentioned earlier, the triple top unknown user. Well done. Any other questions?
There is one. Is keeping warrant overnight a good strategy?
LTH, it really depends. If you have a medium-term view on a stock, for example, like Dialog, then yes, you have to trade. You have to keep it overnight because then you'll get the maximum ROI for a structured warrant over time. But if you're trading something like that you're not too certain of, that has crazy volatility, like Hang Seng, for example, then I would say no need. Why lose sleep over it? But if you have a medium-term view on Hang Seng, then you buy smaller quantity, and then you would be able to hold it longer. So it's always about position sizing more than overnight. So LTH, I think the first thing you ask yourself tonight when you sleep is, do I like to trade intraday, or do I like to not worry about it too much and let it just run over a few days and then check on it like that? Or do I want to pass a warrant on to my grandchildren? If you want to pass something on to your grandchildren, then don't trade warrants. No, you trade stocks. All right. So
That's not passing nothing,
LTH,
right?
yeah. So for LTH, thank you so much. Yes, I'll sleep my arms crossed tonight. Funny, for unknown user. But for LTH, yeah, figure out what kind of trader you are. And I'm very happy to have a private chat one-on-one with you. Just messages on the Telegram private chat, and maybe I can help you out over there. I'm so sorry we only had a few minutes to chat today, but I'm here for you guys.
Probably we'll take this until 10:15 as our last. If there's any more questions, else we can just wrap this up. Let's wait for a while, probably.
Sure. In that case, I can give you the giveaways. I do have 3 questions that I wanted to share with you guys, but I thought we didn't have time. Okay, so I've got 3 giveaways to give away. Shopee vouchers as well. Let me do this really quick. 3, 2, 1, and my slides are back up. All right. So I've got some Shopee vouchers to give away, and all you got to do is answer these really easy questions. All right. RHB, C50. How many tick sensitivity is RHB C50? I taught you guys how to count ticks earlier. Right. If you're not sure, let me zoom in for you. For those of you who can't really see so well, how many ticks?
Season.
There are 2 answers to this one. Okay. It is a range. You can see that it is not exactly one answer. Okay, so count properly. The question is accuracy. It's not so much speed. Count. How many ticks roughly? And in 3, 2, 1, the answer is 5 to 8. 5 to 8. I'll let our Naga Warrant site calculate, see who's the winner. We'll be announcing that tomorrow on our Telegram channel. As you can see, I wrote the answers on the side. It goes from 5, 1, 2, 3, or 5 here. Here has 7. Here has 6. Here has 8. And remember, whenever there is a warrant with many, many ticks, and you think you really want to buy it, and whenever it is at what? Did we learn just now? When it's at the bottom of the matrix, you can message the issuer and ask for a bid price. So here you can get it at 3 cents, 3.5, 4 cents, 4.5. Right. Next question for the Shopee giveaway. Inari C2D, how many ticks? As you can tell, I really like giving stuff away, and also I believe in learning through doing. So I want to see whether my teaching is accurate or not. Some 2s, some 3s, and bingo, guys. The right answer is 2 to 3 ticks. As you can see, 2 ticks, 2 ticks, 2 ticks, 3 ticks. Very nice. 2 ticks, 3 ticks. Excellent to those of you who got it right. Even if you don't win the Shopee voucher, consider that you learned one new thing today. This is your one key takeaway today. All right, and finally, a tough question. A difficult one.
Wow.
Let me move my thing away. This is for the people who have attended my course more than 5 times. No, I'm just kidding. So Dialog, for example, is trading at 240 today, and Dialog C1E's exercise price is 288. There's only one answer, and I won't give you guys trauma. The answer is D. Thank you, Yun Ruo Chin, even though I've highlighted the answer for you guys. Because what I always get people mentioning is that they always think, oh, your research team, they expect Dialog to hit 288. Wrong. Kenanga's Warrant team expects Dialog to hit 288 because they priced the exercise price at 288. Wrong. Kenanga's Warrant team has a large position on Dialog. Wrong. Honestly, we priced Dialogue's exercise price at 288 because we priced it slightly out of the money. It is exercise price is not target price. But let me repeat this. It is incredibly important because even though I've been an issuer for how many years now? 2016. Since 2016, all right? A long time. So let's say, I just want to remind you guys, I've been hearing this so many times. Exercise price that the issuer gives is not our target price. It is just an arbitrary price that we put over there to help our pricing. So it is not a target price. Because warrants, you can always exit before the exercise date. You can always sell to market. So you don't have to wait for it to exercise. You can always sell it to the market at whichever price that they're giving away over there. Say, for example, if there is 4.5 cents on the bid right now, you can sell it at 4.5 cents right now. You don't have to wait till expiry. Nobody's asking you to hold until expiry, guys. And that wraps it up for today. Finish, guys.
Thank you so much, Isabel, for your time. And thank you, everyone that have joined tonight. So we shall wrap this up, and I shall not delay Isabel from her beauty sleep.
Oh, you know my priorities in life.
Yeah.
Thank you so much for all of your tough questions, guys, and your easy questions. We really do try our best to answer all of them. I'm so sorry that I couldn't answer. I couldn't go into depth, as you know that you might be aware that I love going and breaking things down for you in an easy way. But this is just a teaser. If you want any more, our Telegram channel is open. Our Telegram private chat's open, and you can check out our YouTubes.
Yep. All right. Thank you, guys. See you. Have a good night and a good weekend. Bye.